Welcome to the deep dive. Today we're really getting into the details on a major player in India's healthcare scene, Dr. Lal Pathlabs. We'll be unpacking their Q2 and half-year results for FY26.
Yep, that's the period ending September 30th, 2025. And this isn't just about the numbers on a page.
Right.
Our analysis today, it's all based on the earnings presentation, the press releases, and what management actually said on their conference call.
Okay.
And the real question we're trying to get at is, how does a company known for its sheer scale, its huge operational reach, start shifting towards being a high-tech precision diagnostics leader?
Without losing the profitability that got them there in the first place.
Exactly. That's the balancing act.
Okay, perfect setup. Let's dive into the financial scorecard first. The headline numbers look, well, pretty steady, don't they?
They do. Consistent growth. Q2 FY26 revenue came in at Rs 731 crore. That's up 10.7% compared to last year.
And for the first 6 months?
First half at Rs 1,400 crore in revenue, so an 11% growth overall for H1.
And what about the bottom line, profitability?
Also strong. Profit after tax, or PETN, that grew 16.4% in Q2, reached 152 crore.
But the number that often tells a deeper story is the margin, right? The EBITDA margin.
Absolutely. And it held firm at 30.7% for the quarter, which is quite impressive in this competitive diagnostic space.
Yeah, over 30% is definitely premium. What does that signal?
Well, it shows really good operating leverage. They're making more profit from their existing setup, plus tight cost control even while they're expanding. Management guided for the full year, they expect margins between 27% and 28%. So they seem confident they can keep this level of profitability going.
Okay, so that 11% revenue growth.
Yeah.
Was it mostly because they charged more, or were they just doing more tests?
Overwhelmingly volume. The main driver was sample volume, up 10.4% in the first half.
Got it.
Patient numbers also increased, about 5% in Q2, hitting 8.2 million patients. But here's where it gets interesting.
Okay.
The realization per patient, the RPP, basically how much each patient spends on average, that also grew by 5.4% up to Rs 889.
Right, so almost 900 rupees per patient. Why the increase there? Price hikes.
Not really price hikes per se. It seems to be more about complexity. The number of tests per patient also went up by 5% to about 3.09.
I see. So people aren't just coming for one simple test. They're opting for more comprehensive panels or maybe more specialized tests.
Exactly, which feeds right into their bigger strategy around, higher-end diagnostics.
Makes sense. And this strong core growth is even more notable because management pointed out something specific that actually kind of held back volume growth a bit this quarter.
Yeah, that was an interesting little detail, wasn't it? They mentioned that overall volume growth was a bit moderated because there was a lower incidence of seasonal illnesses.
Like dengue, malaria, fevers. The usual suspects for that time of year.
Precisely. Compared to the same time last year, there was less of that seasonal spike. So hitting double-digit revenue growth without that extra push, that really highlights the underlying structural demand for what they offer.
Good point. Okay, wrapping up the financials then. Anything for the shareholders?
Yes, couple of key things. The board approved an interim dividend, Rs7 per share, which is about 70% payout, I believe.
Okay.
And the other big news, especially for market watchers, was the approval of a 1.1 bonus issue.
One bonus share for every share held. That usually gets attention. What's the signal there?
It's a pretty clear signal of confidence, usually. Tells the market two things, really. One, management feels good about future earnings and cash flow to support that bigger share base.
Right.
And two, it often aims to improve liquidity, make the stock more accessible, suggests they think there's still more value to unlock.
Okay, so solid financials, strong volume. But like you said, volume at this level needs a massive physical network. Let's get into that operational strategy, their footprint.
Yeah, their scale is arguably their biggest competitive advantage. As of March 2025, the numbers were 298 clinical labs. That includes 4 big national or regional reference labs.
And the patient touch points.
A huge number, 6,607 patient service centers, or PSCs, spread across the country.
Wow, that's a serious logistics operation. How are they actually using that network to grow?
It seems like a two-pronged approach. First, they're pushing deeper into Tier 3 and Tier 4 towns and cities, places that are, less saturated.
Capturing that shift from maybe smaller, unorganized labs?
Exactly. Building for future scale there. But second, they're also making sure they stay strong in their core metro areas. Think Delhi NCR, Mumbai, Pune, Goa.
And they specifically mentioned Delhi NCR doing well.
Yeah, management highlighted successful double-digit growth there. So it looks like that balanced approach, deepen penetration, and defend the core is working for them.
Okay, let's talk about what drives the B2C side, the direct-to-consumer business. Those preventive health packages, SwasFit TM, how important are they?
Hugely important. SwasFit accounted for 26% of their Q2 revenue. That's up from 24% the previous year.
So over a quarter of their revenue from these checkup packages.
Yeah, they're a key tool for getting customers in the door and keeping them. Makes preventive health easy, accessible, builds loyalty directly with the patient, not just relying on doctor referrals.
Makes sense. What about integrating acquisitions? Suburban Diagnostics was a big one. How's that going? IT integrations can be tricky.
The official line is positive. They're saying the merger and the back-end IT integration for Suburban are now complete.
Okay.
And they expect growth in that region, the West, to get back to that original double-digit target around Q4 of this fiscal year, FY26.
Q4 target. So still something to watch. As you said, big IT projects, they don't always go smoothly.
True, it's definitely something to keep an eye on, whether they hit that Q4 milestone smoothly.
Let's circle back to margins for a second. That strong 30.7%. You mentioned the hub and spoke model, technology driving efficiency. But there was also a very specific choice they made about costs recently.
Ah, yes, the GST point. This is quite telling, I think.
What happened there?
There was a reduction in the GST rate on certain reagents and chemicals they use, and management went out of their way to state they have no intention of keeping that benefit for themselves.
Wait, they're explicitly not pocketing the savings. Why do that? That's direct margin improvement they're giving up.
Exactly. It's not just being nice, it's a purely strategic volume play. By passing on those savings entirely to the customer, they make themselves instantly more price competitive.
Ah, okay. So they're using their scale to potentially undercut smaller labs.
Precisely. Sacrifice a bit of short-term margin gain to solidify long-term market share. It's about winning the volume game first and foremost. Makes their pricing even tougher for the smaller, unorganized players to match.
That totally reframes it. It's an aggressive move to consolidate their position. Okay, this feels like a good point to pivot. Let's talk about the future. The tech investments, the specialty testing. This is where things get really interesting, I think.
Yeah, this is where you see the shift from just volume to really high-value precision diagnostics. They're putting serious money into complex services.
Like genomics, their Genevolve division.
Right, Genevolve. They recently brought in a new piece of kit, the Illumina X Plus NGS instrument. Very high-end stuff.
NGS, next generation sequencing. What does that let them do?
It lets them analyze DNA and RNA much faster and more comprehensively. And crucially, they've launched cfDNA liquid biopsy tests using this.
Liquid biopsy, that sounds futuristic. What is it?
It's essentially a blood test. It can find tiny traces of DNA shed by tumors or other disease markers floating in the bloodstream.
So you could potentially detect or monitor cancer with just a blood draw instead of surgical biopsy.
That's the revolutionary part. It's far less invasive, allows doctors to track disease progression, check for recurrence, maybe even detect some cancers earlier. It's a game changer.
Wow. Okay. And they're also using AI, but not just for general stuff, specifically in cancer reporting.
Yes, this is quite cutting edge. They're the first lab in India, they say, to integrate a deep learning AI module specifically to help pathologists detect lymph node metastasis in cancer cases.
Metastasis, cancer spreading.
Right. And the AI is particularly good at finding micrometastasis. These are tiny, tiny clusters of cancer cells.
Why are those hard to find? Why elusive?
They can be incredibly small, less than 2 millimeters sometimes. Very easy for the human eye to miss, even looking through a microscope slide.
So the AI scans the digital slide images.
Exactly. It analyzes thousands of these images, spotting subtle patterns much faster and potentially more accurately than manual review alone. It speeds up the whole process of staging the cancer and deciding on treatment. That's incredibly valuable.
That's a huge leap in precision and speed. And they're building international expertise too, something about amyloid protein typing.
Correct. They set up the first facility for amyloid protein typing in South Asia, and they did it with guidance from the experts at the National Amyloidosis Center in London.
So investing in these really niche, high-complexity areas sets them apart.
Definitely. It differentiates them from labs just doing routine blood counts. It builds that reputation for cutting-edge diagnostics.
And managing all this complexity and scale needs strong digital infrastructure. They were highlighted as an early adopter of ABDM, the Ayushman Bharat digital mission. What's the practical impact of hitting all three milestones there?
Okay, so ABDM aims to create a unified digital health system for India. Hitting M1, M2, and M3 means DLPL has fully connected their patient records, their lab systems, and their facility registration into this national framework.
What does that mean for me as a patient?
It means, ideally, seamless data flow. Your results from DLPL can be securely accessed by your doctor anywhere in the country if they're also part of the network. Less paper chasing, better continuity of care. It's about making the system work together.
And AI isn't just for pathology slides, right? They're using it behind the scenes, too.
Yes, using their own in-house AI for things like optimizing logistics, figuring out the best routes for sample collection across those thousands of centers. And for quality control, maybe even recommendation engines, it's about using tech to make the whole massive operation run smoother and more efficiently. So the tech enables the scale.
Cool. One last piece on future directions.
Yeah.
This radiology pilot. They're getting into CT and MRI scans. Why?
It signals a move towards becoming a one-stop shop, basically. Integrated diagnostics.
Right.
They're testing the waters with high-end radiology CT, MRI, currently in just one center in Delhi NCR.
And the motivation.
Management says it's driven by patients. People increasingly expect to get everything done conveniently under one roof. Blood tests, scans, the works.
So they plan to expand this.
The plan is to roll out the pilot to a few more centers this financial year. It's clearly a response to evolving patient expectations about convenience and comprehensive care.
Okay, so if we pull all these threads together, the steady growth, the network expansion, the big tech, what's the overall picture management is painting about the Indian healthcare market itself?
They see it at a really crucial inflection point. A couple of big drivers. First, demographics. You've got the rise of non-communicable diseases, diabetes, hypertension, heart issues, obesity. These need ongoing monitoring, regular testing.
Right, chronic conditions.
Exactly. And as new treatments emerge, often expensive ones, the need for accurate diagnostics to guide that treatment just intensifies, as they put it.
So diagnostics becomes even more central.
Yes, they see diagnostics becoming the essential first step in healthcare. And they're perfectly positioned to benefit as the market continues to shift from small, unorganized labs towards larger, quality-focused, organized players like themselves, especially with government schemes like Ayushman Bharat pushing for wider access.
Okay, that brings us nicely to a wrap-up. This deep dive really seems to confirm they're playing a smart game, doesn't it?
I think so. It's disciplined. Use the massive network and scale to dominate the basic volume game, generate cash.
And then reinvest that cash into sophisticated tech AI, genomics, maybe radiology, to build leadership in the high-value precision end of the market.
Exactly. They're leveraging scale to fund precision
Right.
and using precision to differentiate and command better pricing, that higher RPP we talked about.
It's a powerful combination.
It is. And, thinking about that future, this trend towards more specific, more powerful diagnostics, it raises a really interesting question for you, our listener. Management expects diagnostics to become even more critical because of new therapies and rising chronic diseases.
Right.
So given DLPL's investment in things like AI that can spot tiny signs of cancer, micrometastasis, think about this. How might this increasing sophistication moving beyond just annual checkups to potentially AI-driven, hyper-specific, maybe even preemptive monitoring? How might that change how often and maybe why you personally engage with preventive healthcare over the next, say, 10 years?
That's a fascinating thought. Will continuous intelligent health monitoring become the new normal? Something to definitely ponder.